I want to start off by talking about the psychological games being played in the market right now. This news this week and every week really has been on COVID cases and deaths. There's more restrictions in places like New York City and California. This weekend, London was shut down. There's stimulus delays, vaccine delays. This week there was Russian hacking news, which obviously is pretty important. But people naturally get sucked into this, and it affects your subconscious. And I'm not saying these aren't major issues, but the market doesn't really see them as a serious threat. So for now, anyway, your investments shouldn't either. Uh, Traders see the market at all-time highs, and they want to apply that same negativity to it. They're pointing to extreme put-call ratios, money flows into stocks. Let me take a look. So the fear and greed index being at extreme highs. And yes, valuations are high, but they can stay high for a really long period of time. Like many other indicators, it doesn't necessarily mean a reversal is imminent, but that's how people treat it. So here's the fear and greed index over time, and look what happens. The market hasn't even corrected too much, but this is already coming back down to a normal level, between, I think it's, below 70. And we're in a phase where it's going to be moving up and down like this, right? It's going to be, you know, at the end of 2019 where it came back down to this level and then got more extreme. That's the phase that we're in right now. We're not in another phase like March or like at the end of 2018 when there was a large correction. It could happen, but as of right now, the way that we have to treat this move, and I'll explain why, is that we are in a phase where we are going to go to higher highs. So let me go back to the dollar. So really all that matters right now is the Federal Reserve. The meeting this week was a non-event. They will continue to be extremely accommodative for the next few years at least and support this market with their liquidity and near zero interest rates. Until their stance changes or the market begins to realize that there's some adverse effects that are going to come from this, you have to be long, or at least, long with stops and being cautious. The value of the dollar is falling, and all risk assets are going to be pushed higher. So, since October, I've been watching this range, so this top end range that hit in the summer and then found a low in September. And, it bounced around between here. And until November, it looked like it could have broken either way. But now we have a very powerful move out of the top. This is what's driving prices higher. It had a powerful move, it was sustained, and it's continuing more. So looking at my target is the 2018 highs. So there's still another move about equal to this move, a little bit higher, and let me go back out to weekly, monthly. This is 2018, that's that red line on that other chart. And this is my target, potentially even higher if it goes straight through it. I mean, who knows? This is just an obvious target in the last few years, and that's what I'm looking for. And until that gets hit, and this strong move on the daily keeps moving, I don't see a reason for it to turn around. So don't let the negativity make you think that it's going to. Taking a look at the Nasdaq ETF QQQ. So this negativity bias that I was talking about feeds fear, and traders are subconsciously afraid to buy and hold stocks. So they have been since March, and look what they've missed. Personally, I've been affected by it too. I've been in and out. I think moves like this in June, I certainly got afraid. I don't think I got back in until this moved higher. I've been in and out through here. I got out way too early, didn't see this one coming. So nobody's perfect, but as long as you're making money, that's what matters. Since September, I've said, we're riding the top of this channel and going out to the monthly. This goes back to 2010, right? So we've been in this channel, or been, kind of moving up at a steady pace, but now we've broken out of the top of that channel, and it looks like we are about to move higher and move into a real bubble phase that could, on the QQQ, could push 350, 400 in the coming months if that were to happen. Um, Back to the daily. So this is that range right now, and it's not perfect. I don't believe in drawing lines, but I do believe in long-term trends, and I think this could potentially have the move similar to like what we've seen in the Russell. So let me show that. So this is the Russell. Um, hasn't been nearly as strong as some of the other indexes. Uh, you know, saw a significant decline like everything else in uh, in March. Came back up, and these are the two levels that I was watching. And when it broke those, this was, I think, that first vaccine news day where it had a massive move, and it's continued. Small caps are really, taking off, and I think other indexes are more likely to follow this sort of pattern than reverse it. When you look at a daily chart, it doesn't look so extreme. I think when you look at the monthly is when you say, "Oh my God, look what I'm missing out on." It's just moving straight up, and you can't expect moves like this to just turn right around. Um, so, what advice I'd give anybody is always do your due diligence. Know what your investing is, but find where you see momentum, something like this, and find where you can agree with it or where you think it's about to start. Don't fight moves like this. This is something that you don't want to be on the wrong side of, and it's blatantly obvious that the market is going in this direction. So don't fight it. Find where you agree with it. And if there's a better opportunity right now, it might not be in the Russell. I think it could be in the Nasdaq or some other index. I'll make another video soon on gold and silver. I think that's another area that could potentially take off and have a strong move just like this one in the Russell. So find where you think that's about to happen. If you like this post, please give it a like and subscribe. And again, always do your own due diligence, do your own research, and make your own plan and execute it.